Stocks mixed as markets weigh Trump picks and Fed outlook. Stocks fluctuated Monday as traders assessed the impact of Donald Trump's policy agenda and awaited his Treasury Secretary nomination. Europe's Stoxx 600 remained flat, while S&P 500 futures edged higher after the underlying index lost over half its post-election gains last week. Concerns over inflationary policies and a more hawkish Federal Reserve tempered market optimism. U.S. retail sales data further reduced expectations for immediate rate cuts. 10-year Treasury yield steadied after hitting 4.5% last Friday. In Asia, Chinese stocks dipped despite a brief policy-induced rally, while Samsung Electronics posted substantial gains. Eurozone and UK inflation reports due midweek could influence central bank decisions, while Nvidia's earnings may test the sustainability of AI-driven stock gains. The Bloomberg Dollar Index held steady near two-year highs. Bitcoin rebounded from steep losses, oil prices climbed, and gold advanced after last week's sharp declines. Cathie Wood, Bitcoin's $90,000 milestone is just the start. Bitcoin's rise to over $90,000 has bolstered investor confidence, but ARK Invest CEO Cathie Wood believes the cryptocurrency's potential remains largely untapped. Speaking to CNBC, Wood attributed the rally to improving regulatory clarity under the new U.S. administration, which she says will strengthen Bitcoin's position as a distinct asset class. Despite hitting an all-time high of $93,477 on November 13, Bitcoin has since dipped slightly. Wood remains optimistic, pointing to slowing supply growth post-halving and strong on-chain metrics as signs of a resilient bull market. ARK Invest's 2023 report predicts that Bitcoin could reach $650,000 by 2030 in its base case, with a bullish outlook extending to $1.5 million. These projections underline the firm's confidence in Bitcoin's long-term potential, even amidst short-term volatility. Oil prices rise amid escalating Russia-Ukraine tensions. Oil prices climbed on Monday following heightened Russia-Ukraine tensions, with Brent crude rising 0.3% to $71.22 a barrel, and U.S. West Texas Intermediate crude up 0.1% to $67.08. Russia launched its most extensive airstrike on Ukraine in 3 months, intensifying geopolitical concerns. The Biden administration's decision to allow Ukraine to strike Russian targets with U.S.-made weapons marked a significant escalation. Analysts suggest this could disrupt oil markets, mainly if Ukrainian forces target Russian oil infrastructure. Despite these developments, weak demand from China and forecasts of a global oil surplus weighed on prices. Brent and WTI dropped over 3% last week amid slowing Chinese refinery output and factory activity. Meanwhile, U.S. oil rig counts hit their lowest since July, reflecting broader uncertainties in global energy markets.